this video, we are going to talk about green bonds. To begin with, we will see why green bonds are issued. Environmental issues are becoming more and more important around the world. Extreme weather is the #1 global risk today, with environmental challenges acting as the ultimate risk multiplier. In order to maintain a 2 degrees Celsius warming trajectory, carbon emission must fall by 50% by 2050. Green technologies have the ability to deliver climate modification impact. We see green bonds as tools for mobilizing private capital for solving environmental challenges. Now, we'll see what is a green bond. Green bonds are fixed income instruments where proceeds are attributed for environmental challenges, which should be appropriately described in the legal documentation for the security. How to standardize the green bond? The different standards in the market are green bond principles, climate bond standards, and green bond indices. The green bond principles promote integrity in the green bond market through guidelines that recommend transparency, disclosure, and reporting. The 4 main areas of guidelines are the following one. The first one is the use of proceeds. All green projects should provide clear environmental benefits, which will be assessed and quantified by the issuer. The second one is the process for project evaluation and selection. The issuer of the green bond have to communicate to investors the environmental objectives, the way how the project fit in green project categories, and the related eligibility criteria. The third one is the management of proceeds. The net proceeds of the green bond should be credited to a sub-account, moved to a sub-portfolio, or otherwise tracked by the issuer. The final one is the reporting one. Issuers should make and keep available information about proceeds. This document should include a brief description of the projects and the amount allocated and their expected impact. The main green bond indices are the following one: Bloomberg MSCI Barclays Green Bond Index, Bank of America Merrill Lynch Green Bond Index, S&P Green Bond Index, and finally China Green Bond Index.
Green bonds have just celebrated their 10 years anniversary, and currently the total value of outstanding green bonds is 389 billion. The green bond market has seen strong growth, growing of 74% from 2016. The universe is now comprised of more than 550 issuers from 45 countries and in 29 different currencies. Any organization with bonding authority may issue green bonds. In particular, corporate issuance is a key driver of growth, counting 56% of total issuance in 2017 and being the financial services sector the single largest corporate issuer. The biggest development in 2017 has been the emergence of sovereign green bonds. They are increasingly seen as the key tool for government to raise capital to implement infrastructure plans to meet the Paris Agreement targets. Supranationals historically have been the largest group of green bond issuers and were also the first movers. Today, they comprise a smaller share of the green bond market, but their issuance tend to be relatively stable. Green municipal bonds are seen as an important area for future growth as cities look to low-cost and long-term sources of capital to finance climate mitigation requirements. Finally, a asset-backed green bond market kicked off in 2013 and is expected to grow in near future. With the function league in Bloomberg, it is possible to find league tables of green bonds that show the market breakdown by volume and the total volume issued every year. Another interesting function is search, that now has the ability to search on green bond issuance with @green, on all issuers designated green bonds with @green1, and on municipal bonds, Bloomberg considered to be issued for green bond purposes with @green2. In the case of search @green, green bonds can be grouped by asset class, by currency, or by country. Growth and development of the self-labeled green bond market provides great benefits for issuers and investors. While most of the issuance is relabeling of existing investment, 1/3 could be new annual investment in renewable energy. To support international climate goals, some industry leaders believe annual green bond issuance need to scale to $1 trillion annually by 2020, or nearly 10 times the current rate of issuance. Global investment portfolios could lose up to 45% of their value to 2020 as a consequence of climate change, technological change, and asset trending. Renewables have the greatest potential for additional returns. Investments that promote a clean energy economy could reduce overall portfolio risk while aligning investors' financial interests with the need to tackle the challenge of climate change.